Okay, so the trend is your friend. I don't know how many times I've been singing this throughout this course, so you're probably bored of me saying this again, but that's just how to stress this point, that you never trade against the trend. Okay, this is very, very important, very, very key, and something that will either make you a winning trader or make you lose most of your trades, right? Remember, day and night, we only create winners, right? We only create winners in this market. So it's very, very key that you understand that the trend is your friend, right? So if the market is moving upwards, it will continue to move in that direction until an opposite force occurs, which will be a reversal point, right? So the opposite force is the resistance levels, the downward trend lines, the news. So we spoke of new fundamental news and how they can affect your trades. These are just a few things that can change the direction of the trend. So the first thing, when you open a chart, you should know what the present trend is and if the trend is ending or it has just begun, right? So you should also be aware of a new trend beginning. So this is very key so that you can capture those trades. So remember, we said when you're drawing a trend line, you should have at least 2 points to plot your trend line. But then on the third touch, you should be expecting to join in on the trend, unless if it's very steep. That's when you need to give it a bit more time to act, to show us the overall direction of that trend, right? So what is a trend? A trend is simply the overall direction in which price is moving. So it can be up, down, or sideways. So the market is never going back. Again, I should stress that. So it's either is going up or is going down or moving sideways, but it's always moving to the right side, right? So there are three types of trends. We have the uptrend, we have the downtrend, and we have the sideways trend. So uptrend is where the market is consistently moving higher, where the market is making higher highs and also higher lows. So we demonstrated how those looks, and you should be very familiar with those right now. So we demonstrated how those looks, and you should be quite familiar with those right now. So this is an example of an uptrend right here. As you can see, we have our market making new higher highs and higher lows, right? Making higher lows, higher highs. So that is how the market moves in an uptrend. And obviously the opposite is very much true. When we have our market making lower lows and lower highs, lower lows, lower highs, that is a downtrend market, right? So that's how the market moves, right? So that's what you need to understand. So notice the increasing peaks, the higher highs, and the increasing troughs, so which is the higher lows, right? So the troughs is where we connect our supporting trend line, which is our supporting trend line, and then here we have our resistance trend line, which is basically we connected using our peaks, right? The increasing peaks, which is the higher highs, right? So in the downtrend is where the market is consistently moving lower, where the market is making lower highs and lower lows. And then the sideways trend, prices will be contained within a price range. So this is basically where we have our ranging market, as we showed you earlier, where basically the market is between the support and resistance, and it's just trading between those, right? So where we said our potential selling opportunities at the resistance level, and then our buying opportunities at the resistance, right here at the resistance. So that is what a sideways market is, and consider this as a resting period. After resting, it usually continues in the direction of the overall trend. An example of a downtrend market, as you can see, the overall direction is going down, and we can see it by lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. So notice the decreasing peaks. So these are our decreasing peaks, which makes the lower highs, and then the decreasing troughs. So the troughs is what gives us the lower lows. The lower highs is what we use to connect and draw our downtrend line, so which is going to be our resistance trend line, right? And we can also have our second line here, which will be our support trend line in a downtrend. And then in a sideways or flat trending market, this is basically how it looks like. So we have price in a range. So as you can see, we have explained a little bit earlier as well when we explained the three types of market, so which were either uptrend, downtrend, or in a range. So as you can see, this is an example of a range. But we also have choppy markets. So this is where you can also find sideways or flat trends in a choppy market. But remember, choppy markets we don't trade at all. So those are the two market types where the sideways or flat trends can actually occur. So either in a range or in a choppy market. But here in a range is more powerful to trade those, because remember, to the choppy markets, as I said, we don't trade that at all. So this is an example of a sideways or flat trending market. So it's just between this very powerful horizontal support and resistance lines, and we basically will be able to sell at the top and buy at the bottom, right? Buy at the bottom, and then as you can see, a breakout and a retest occurring right there. It will move in the overall direction after it breaks out of that range, and as you can see, it continued in the downward side. So that's basically what you need to understand about the three different types of trends. Now the question is how to spot an uptrend when it changes to a downtrend. So you understand when support or resistance turns into resistance, or when the resistance turns into support. But when it comes to a trend, how do you actually spot the change from a downtrend to an uptrend? So an uptrend changes to a downtrend when the pattern of higher highs and lower lows is broken. So remember, when the market is going up, it is higher highs, higher lows, higher highs, higher lows. But the moment that the pattern breaks, like what you're seeing right here, we had our higher highs and higher lows, and then the pattern actually changed right there, right? As you can see right here, this is where our pattern changed, and that was a turnaround point of the uptrend changing into a downtrend. So this is the beginning signal of a possible trend change. So the change in a trend. So how to spot a downtrend change to an uptrend? Downtrend changes to an uptrend when the pattern of lower highs and lower lows is broken. With information of a new high that is higher than the previous high, this is a signal that the trend may be changed to an uptrend. So when a higher low is broken, it gives us the signal of a downtrend high. So basically, in summary, what you need to understand is when a higher low is broken, it gives us a signal that a signal of a possible downtrend, right? On the other side, on the flip side, when a lower high is broken, it gives the signal of a possible upward move, so an uptrend, right? So this is if you can just show you on the chart what this actually means. So as you can see here, we were making our higher lows and higher highs and higher lows, and then here when we come here, look at what is happening here. This is our higher low, right? So we expect that the market, when it comes to this point, it shouldn't make a point that is equal or at the same level as our previous higher low, right? It should be somewhere around here, and the market shouldn't even touch that point, so that we can have another push to the upwards to make a new higher high, right? But that is not what is actually happening here. As you can see, it made a higher low, but then the second move is actually it made a point that is lower than this point here, and hence we call it a lower low, right? So that is when we see that the trend is a possible change in direction. It's not really yet confirmed, but then once it creates a lower high, a point that is lower than this point right here, then that is now confirmed change of a direction. You can now see that, okay, cool, even the next movement that was made is actually lower, and then the next one is even lower than the previous one, hence confirming our downtrend. So the lower high and lower lows and our downtrend has been confirmed. That is how we see that an uptrend has turned into a downtrend. So it is very key and important that this concept must be fully understood, because it will give you the ability to just glance at the charts, and right away you'll be able to know whether you're in an uptrend or in a downtrend. So it will also give you the ability to spot if a new trend has just begun. So as you can see here, we have our uptrend again, and this is our downtrend beginning right here after it broke through the higher low. A lower low was made, a lower high made, and that was a confirmed downtrend. The beginning started right there, it was started, right? So, and then we see we have price goes up and touches, so it goes up and touches the downtrend, and then that is a short setup. So you can actually sell right here after you see this confirmation, because at the same time, I don't know if you can see, but you can actually have we actually have a pin bar, bearish pin bar right there, which is our reversal candlestick pattern, which appears right there. So once you see that, it's a fully confirmed position to enter, and at the same time, this actually works as our morning star. So remember, we have another pattern, which is this is actually our evening star. So this is our evening star together with bearish pin bar. So this is like a triple confirmation for you to actually sell in this position, right? To sell this position. As you can see, the trend just went down, so it was really powerful entry point that you could have had right there. So this is what you need to understand to be able to spot whether the trend has changed or the trend is still continuing. So basically what happened in the chart is that firstly, a higher low was intersected, giving us a possible downtrend signal, and then secondly, the price goes up and touches the downtrend line, the newly formed downtrend, and knowing already that the downtrend signal has been given and the trend line setup is happening, you should be confident entering a short signal. So because now it has fully been confirmed that the trend has now changed, right? So trend line trading strategy is not just about drawing trend lines. The above information is important because you want to be able to get a trade at the very beginning of a trend, when the signal is given, right, that a trend change may be happening. So that is a very key point. So if you have been locking profits or trailing stop your trades under the higher lows or lower highs, it signals time to get out of the market to take profit, or the market will stop you out on its own. So thirdly, you should notice how trends change when combined with trend line trading strategy allows a trader to get in at almost the beginning of a new trend. So this is very, very powerful. So here's an illustration of a downtrend. A market was going down and then it turned into an uptrend. So as we can see what is happening here. So here the market is coming down, but check what happens here. So here we have our resistance line, right, showing us consolidation. So the price is starting to consolidate, and there is a consolidation that happens in this phase right here. And then here we have our support line, our mini support line right there. And as you can see, after this consolidation phase ended, it basically broke through, right? It broke through, came back for a retest, and then after a retest the downtrend continues, right? So the downtrend continues after turning our support into resistance. But then check what happens here. So here we can say this is our lower low, right? So we can call this our lower low, right? Because this is where the market stopped before going a little bit higher. So it came back and it came up here a little bit. So here this will be our lower high, because this is in a downtrend, right? So this is our lower high. But check what happens here. From here we came down all the way here, we created a new lower low, which is valid. It validates that our downtrend is still going on. But when it reversed, it actually went in to make a point that is a little bit higher than this point. So the same point here around this point, but it actually broke through that level, right? So this is making giving us a new higher high, and then after that we had a higher low, because this point did not come back all the way down here. The market did not come back all the way down here where we had our lower low. That's basically confirming that we now have an uptrend. And as you can see, higher low, higher low, higher low, higher highs, and the market basically changed. So that's what we are looking for. So the moment that we have in a downtrend like this, and the moment that we have the sequence being broken, the sequence of making lower highs and lower lows, lower highs and lower lows, that moment is now the signal that okay, cool, this can be actually turned into an uptrend because the sequence has been broken. And with the moment that you see, so let's say it breaks and makes a higher low, the moment that you see a higher high and you see a higher low, that is just a pure confirmation that the trend is now going up, and you should start looking for buying opportunities. So very, very key to understand this. And then as you can see, it lost momentum after there. Why do we say it lost momentum? Because it did not make a new higher high. So it did not make a new higher high, showing us that it has lost its momentum. The uptrend has lost its momentum. And remember what happens here. Look what happens here. We had a downtrend, it consolidated in a ranging position, and here is what we're having again. We're having a ranging, so we can actually expect a breakout to the top. So we can expect a breakout to the top, a retest, and then the market continues going to the upside. So by analyzing this market, you can see that the very important key things to understand here is the structure of a downtrend and the structure of an uptrend. So higher highs, higher lows in an uptrend, lower lows, lower highs in a downtrend. So it's very, very key to understand those, and then be able to draw your support and resistance, the trend lines from the highest points, right, from the highest peaks and the highest troughs. So it's very, very important.